Anushka Sarkar. Well, we now have Matt Orton, who's the Chief Market Strategist at Raymond James Investment Management, joining us. Hi, Matt. Very good morning. Thank you so much for joining us today. Before we discuss global markets, let me first come to you about the tariff that US has imposed on India. That's additional 25% tariff that adds up to 50% tariffs on Indian imports to the US. Now, your first thoughts. Now, there was some anticipation that this deadline may be extended, or there'll be some negotiation, and there'll be a date that we will have in focus, but nothing of that sort. So there's a lot of uncertainty there, and the tariffs have come into effect. So what are your first thoughts there?
Yeah, well, first, good morning. It's always great to join all of you. And I think with respect to tariffs, we need to know, first of all, that this was expected. We knew that tariffs were going to come. And I think the main takeaway with respect to tariffs is that it impacts a relatively small portion of the overall Indian economy. Nonetheless, the impact could still be 30 to 40 basis points off of GDP growth, which is not great. But there's also a lot of exceptions. There's carve-outs to the tariffs that have been imposed with respect to semiconductors and pharmaceuticals and the likes. So it's not as universal as it might seem from an initial take. And I do think that the objective is to negotiate these down over time. So hopefully we can see a summit between Modi and Trump, just like we saw a summit between the president of South Korea and Trump this past week, where there was a favorable outcome with respect to tariffs, or at least, having the lower possible rate put in place. So I would like to think that we can have some constructive developments going forward, which would help markets with a sentiment boost, I think, both for domestic and foreign investors in India.
Right. Martin, what do you think is going to be the right, tariff rate? 50%, of course, is, very high rate that has been imposed on India. But going forward, as and when negotiations take place, what do you think is going to be an ideal tariff rate that India is likely to face?
Yeah, well, an ideal tariff rate with respect to truly open markets is probably something near zero, but that's not exactly where we are right now. I think moving down someplace in the line of what a lot of other Asian economies are paying, somewhere between 15 to 20%, I think would be a really, really good outcome for India, because it puts India on a level playing field with other exporting Asian economies. It'll put it on a level playing field with China. And I think that would be a very strong signal to the Make in India plans that Modi's trying to push, and especially increasing manufacturing capacity in India, to show that India is on the same level playing field as the rest of the Asian economies. And I think that would provide a very strong sentiment boost to foreign investors, that we can kind of wash our hands and know that India will be treated the same as the rest of the continent, and then any other special deals could be further negotiated after that.
Right, so 15 to 20% base tariff is what you've suggested. But, now talking of the markets, how do you expect the markets to react? And speaking specifically of India, how do you think Indian markets are placed now in the global scenario, given that we are facing this kind of high, 50% tariff from the US, and that's already come into force?
Yeah, it's amazing how quickly things can change, because I remember after April 2nd in Liberation Day, how Indian markets actually held up relatively well compared to the rest of the world, because India was seen as a ballast from a lot of this trade noise and anticipation that the relationship between Trump and Modi could lead to favorable terms and a deal being negotiated. And now here we are, where I think India is in the worst case scenario with respect to a lot of Asian markets. The good news is how strong the domestic market is within India, and the fact that it is a largely consumer-driven economy, very similar to the U.S., which is not the case for a lot of Asian economies. So its ability to weather the storm, I think, is much stronger. I think the challenge, though, is you have this coalescence of weaker earnings growth that the Indian market has been facing, combined with sour and foreign sentiment because of the tariffs, because of weaker earnings, and also just the strength of, say, the Chinese markets and Korean markets in the emerging market complex. I think a lot of that has been a big contributor to foreign capital outflows from India. But I think a really important message for investors is that the Indian market is not a monolith, and really the opportunities within India, as I would argue this across any market, it is very stock specific. There's a lot of really high quality Indian companies that are growing earnings, that are very solid compounders of growth, whose stocks have done incredibly well this year. And so I would encourage investors, instead of looking at it as an index, to really break it up and treat it and look at the Indian market with respect to long-term durable growth themes and invest in the companies that are best levered to a lot of those themes, whether it's increasing travel, whether it's the fact that you have a lot of finance and e-finance that's starting to take place, rapid service deliveries. There's a lot of opportunities, I would argue, within the Indian market that, because of the discount that foreign investors have, I think look very, very attractive as long-term investment opportunities, especially now with an entry point.
Absolutely. So India, of course, remains a long-term story, and that's the word coming in. But Matt, now do you think global investors, they're going to demand some kind of high-risk premium for Indian equities if this tariff negotiation continues for a long time?
Yeah, I think they already do. And so I think the benefit for India right now is that I think the direction largely can be constructive. A lot of the worst news, I would argue, is baked in with respect to tariffs, where tariffs are set right now. The wild card is Russia and what happens with the Russia and Ukraine war, and whether Trump tries to push India as almost the scapegoat for buying Russian oil. I think that's a lower probability scenario, but I think sentiment is already so negative. Indian markets have been very weak with respect to the rest of the emerging market complex that I think any news is going to be treated disproportionately positive for the market. And I think investors will see the relative discount or the relative cheapness of India, at least on a shorter term basis compared to other EMs, and start to move money back in, or at least see the strength and resiliency of a lot of really good names like an M&M, for example, or Eternal, or a lot of companies that fit into these longer term durable growth themes.
All right. Thank you so much, Matt, for taking us through all those, important inputs and sharing your insights on how the Indian markets and the global investors are looking at Indian markets in the face of these tariffs that have been implemented on India. Thank you so much for joining us today and helping us with that perspective. On that note, we'll let you go.
Thanks.